Once again, let's start with NIMs, because you guided 1.85% at least for the full year. Now, is that the high watermark, and are there any downside risks to that forecast?
It's hard to say it's the high watermark, because 10 years ago, NIMs in Singapore were 2.25%. So there's potentially rates could hike a lot more than where they are today. I expect to see at least a couple of more Fed hikes this year, maybe 3. And if most economist reports are to be believed, you're probably looking at another 2 to 4 hikes next year. So I do think that there is some upside in the interest rate outlook and therefore the NIM outlook for us. One of the things that you have to always figure is how much of the Fed action passes through into Asian rates, both the Hong Kong dollar and the Sing dollar. It's been somewhat muted till the last few weeks. But in the last few weeks, even that pass-through has picked up quite nicely. Both SIBOR and HIBOR are beginning to pop up quite nicely at this stage. And if that happens, then we might see some improvement in our NIM. So I think 185 for the year, quite likely we might even have upside of a basis point or 2 from there.
Let's talk about the Fed. And you've said that 3 is probably the base case for this year, 3 rate hikes. What's the risk that we see 4? What are the implications for NIMs under that scenario? And does that raise the risk of defaults? Because servicing that debt is going to be that much more challenging, I would expect, for mortgage holders.
I think the real deliberation in the Fed is the trade-off growth and inflation. So far, growth has looked robust, but they haven't seen inflation come through, except in the latest set of readings. Growth moderated a bit, but the inflation pressures, especially wage pressures, do look like they're coming through. Most of the rhetoric that I've read in the last couple of weeks is definitely more hawkish than it was a month ago. And so based on that, I think there is every possibility that you might see a rate hike every quarter in the course of this year. Now, what does that mean for overall credit environment? I think you have to remember that rates, while they're going up, are coming from historic lows. And therefore, even if you wind up with 1% point higher rates, that's still a lot lower than rates used to be prior to this easy monetary period. In some of our situations, you take our consumer book, for example, we've always priced in an expected interest rate of 3.5% when we calculate debt burden ratios. Now, we are a long way away from 3.5%, even if there are 3 or 4 rate hikes. So I think there will be some headwinds, and I think there will be some headwinds in the unsecured books, consumer lending and SME. But I don't expect either the economy or our portfolio quality to fall off a cliff.
Let's talk about global trade tensions, Piyush. Are there any signs from corporate clients in this region that they are postponing capital spending until the dust settles on the tariff policy?
I haven't seen any particular signs. I really think of the trade tensions in 2 buckets. One bucket I'd call actually trying to balance the trade imbalance between US and China. And in that bucket, I really am relatively sanguine. I think the Chinese are sort of committed to reducing the size of the trade balance. They lowered the import rate on cars. They're sort of quite happy with some tariff on steel and aluminum in the old sector they can live with. So the narrowing of the trade imbalance, I don't think will cause a fundamental huge challenge. The second set of issues, though, could be more challenging, and that's really to do with intellectual property in the technology sector. I think the US administration is really quite focused on making sure that the technology issues or the leakage of technology to China is controlled and constrained. Now, that might actually cause some impact on the technology supply chains in Greater China, both Taiwan, China, Hong Kong, and that is something that does bear watching.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.